So this one's on inflation concerns and strategies for managing what will almost certainly be higher mortgage payments.
All right. You want me to kick it off?
Sure. Kick it off.
All right. So next episode that we're talking about today, I'm actually think this is, of course, a timely discussion. And I think it's something that needs to have a greater microscope on. So I'm glad that we're talking about it today. My previous episode, I've talked about how the psychology of money, and most people don't like talking about money, right?
The funny thing is, you mentioned that people spend more time planning a vacation than they do planning for their retirement or they're talking about their mortgage.
Absolutely. Because I think, there's this stigma about talking about money. People like to talk about when they have a lot of money, but people don't want to necessarily talk about when they can't afford stuff. And there's sort of this shame in society that's associated with having high debt loads, but the numbers speak for themselves. I mean, anyone that reads any articles today, Canada probably has the most consumer debt load that's out there on the planet right now. We're hiring the highest amount. I think the last numbers I looked at, for every dollar earned, it was like $1.80 in consumer debt that most Canadians have. And I think, this is a timely discussion because, warp in their inflation and what we've seen happen over the last 2 years since rates have gone up and the cost of living has gone up. A lot of people have been smacked in the face of how this is all impacting them. It's interesting though, because I found that we were more as a collective in society open to be talking about what we were going through mental health wise when it came to the pandemic, but not necessarily talking about the mental health wise of what Canadians are going through right now. I'm sure you guys have stories that you're thinking about or scenarios of consumers of what they're going through right now with trying to juggle that household expenditures and that balance sheet. And, how can I still maintain my lifestyle? Also, as well, it's no hidden fact because it is everywhere all over social media, how many mortgages are coming up for renewal over the next 2 years. The vast majority of Canadian households are going to have their mortgages come up for renewal. And no surprise, rates are a lot higher than what they had previously. So, how am I going to deal with this as well? So I'm going to kick off there, Glenn, and just to say to you, to understand, how are you seeing the impacts of inflation right now when it comes to your consumers, and what are some of the narratives or suggestions that you're seeing out there on the marketplace?
There are 2.2 million mortgages expected to renew over 2024 and 2025. That equates to approximately $600 billion in mortgages. So there is no better topic than to talk about what's going on with inflation. But, there's a Seinfeld episode, and I don't know why this is coming to my mind. And
because we love analogies at this firm.
Kramer says, I'm going to just write it off. And Jerry looks at him and he goes, you don't even know what a write-off is, do you? And he goes, well, the people writing it off know what a write-off is. Something like that, right? And it sort of leads into inflation. Do people really know what inflation is and the impact, right? So I'm going to start with saying inflation is the gradual increase of goods. And they almost never, I'll say almost never, but they almost never come back, right? So this is the erosion of a dollar. A dollar today will buy you, I don't know, 1/10 of a head of lettuce or something. I don't know. But if inflation continues, and this is why Bank of Canada is so adamant in getting this under control, when it was at 8%, when inflation was at 8%, that $10 head of lettuce today, which is still crazy, would be $25 for a head of lettuce in no time if this inflation stays out of control.
Right.
So your dollar is just getting weaker and weaker. Every dollar you earn, you cannot keep, our wages are not keeping up. So I just wanted to make sure that we all are on the page of what inflation is. Now, what was your original question?
Well, how does it impact the consumer at the end of the day? And I think you started to get into that of understanding, and that's a great stepping off point. I find that there's a misconception out there with not all consumers, but I've gotten this where it's I can't wait for this to be over when things go back to the way it was. And I think, correct me if I'm wrong, right? Glenn, you can jump in here. The prices that we see to stay on stuff won't necessarily go down unless we're hitting into a deflationary environment, which is few and far between. It's rare, right?
Yeah.
Okay.
And that's why Bank of Canada is so keen on, like, we have to get this under control, or else it's going to spin out of control. So, Peter, what would you say is the direct, like, how inflation impacts people with mortgages? Like, how does that inflation turn into?
Well, just like you said, everybody doesn't know what inflation means, but the funny thing is, they're all worried about where their cash flow is going. So what it affects is cash flow, erosion of the
Bank
dollar,
of Canada,
right?
Bank of Canada is increasing rates to fend off inflation.
Mm-hmm.
What happens to our mortgage payments as rates go up? Of course. Like, so this is like directly impacting all of our clients. It's affecting us as clients. We're not only talking about our clients, we're talking about ourselves, right? This is like, inflation doesn't, it's not a, only picking on some and not picking on others. We're all impacted by
And the problem
this
is,
thing.
2 years ago, the environment was, we were saving so much money. Like, point in case, rates were low, prime was low, rates were all under 2%. We were saving so much money, spending so much money, and all of a sudden, within a 3-month period, prime increases by what, 400%?
Mm-hmm.
And your cash flow just disappears.
Okay, yeah.
Right? Your disposable income just went down.
Yeah. So now grassroots, right? It's like, what are the strategies that we would tell clients on how to best manage, like, these renewals are coming. Your payment is going to be higher. What are our options? Like, what can we do?
I think the number one thing is, don't stick your head in the sand. Know thy renewal
Budget.
date would be the first one.
That's true.
Right? I would say, I would guess most individuals don't exactly know when their mortgage is coming up for renewal. Know when that is coming up for renewal. So if you have an inkling, or you think your mortgage is going to be coming up for renewal in 2024 and 2025, know what that date is. That's number one.
Because don't wait for your bank to let you know. Some of them are waiting till the last month beforehand before they go ahead and tell you that, oh, your mortgage is coming up for renewal.
Some of you might be getting calls from your bank right now and you're not returning those phone calls. Again, going back to the advancement in technology, some people are paperless. So you might only be getting emails. If you're like me, I probably get on average like 500 emails a day. It can get lost in the whole entire email junk box mail that you're getting sent to you every single day. You may not be paying attention to whatever the subject line is, and it's a delete. Bank's calling me. Why are they calling me? I don't need to talk to them. Not having a phone call. And then you fast forward to your point, and you're too close to your renewal date to actually do anything. It's almost like you just got to pick whatever's there in front of you. So knowing your renewal date is super important, because that's going to allow you to start having more fuller conversations with your mortgage professional. And you should be having fuller conversations with your mortgage professional. I think right now, with the way interest rates are today, everyone's going to be going into a higher interest rate. There's no way around this.
Yep.
Unless you're moving from a subprime private to an A world, maybe your rate's getting better, but even those rates were a lot lower in the last couple of years. So everyone's payments are going a lot higher. But I don't want consumers to be afraid, because there's options. And by you knowing your renewal date and scheduling that time well in advance, even if it's a year in advance, at least you're starting to engage in that conversation. I'd say start there.
That fuller conversation you mentioned is a good one, because it makes me think of my, I would say, getting prepared for that meeting with your mortgage professional. Do a budget. Like, know your budget. If you don't already have a budget and you know what and why things are coming out of your bank account, do a deep dive into that, and you're going to walk in being able to talk about how to best save, because your mortgage payment is going up. Unless we can come into some more advanced strategies like restructuring and stuff.
Which we'll get into.
Yeah. Right. But, like, example, how many streaming subscriptions do we need? I don't know. Like, I have this argument with my kids all the time, but I could tell you that I'm probably paying into 3 or 4 more than I probably need. And it's all like this. If you put the stuff on paper of what actually comes out of your bank account, it is shocking. We all do budgets, I'm sure. Do you guys have I have like this spreadsheet, surprise. I have a thing for spreadsheets that lists everything. And that was when the hard conversation started happening. It's like, here we are, high inflation, time to start trimming
it down. So I agree. That was my second one. I'm glad you took it off. Know thy budget. super important. Know thy renewal date. Second one, know thy budget. Know how much you need to spend each month to go even a little further. Look at what you're spending each month and then take it a step further and then start breaking it down between what's called, remember the old days of financial planning, wants and needs. I think as a society, we've forgotten about that. I think that, when rates are low and times are good, it is more about all the wants and the needs get very blurred together of being, we're just doing it all, right? It's all one big need. Well, no. There are things that you need to be spending your money on, and there's things that we want to spend our money on, right? So know your budget, then know your wants and needs. So that's the way I would go down sort of the chain. What would be another one, Pete, that you would say if your mortgage coming up for renewal?
Listen, mortgage renewal date is a great way for the client to reach out to you and review their situation. But I do have some clients that I do annual checks every year.
Smart.
Right?
Yeah.
So, and we're not just mortgage brokers, specialists.
You're not a one transaction. Like you get your rate, you get your mortgage, and away you go. I have clients
for years, and I'm sure we all do that. We go through analysis every year. Like we're here for the long term, right? We're going to plan for another property that we're going to purchase. We're going to plan for maybe renovations on the house, or purchasing a car, or going on vacation.
Yep.
And I do have a few clients that we actually do annual checks.
And you know what? I'll throw in there. I'll add that into the fourth one, right? So know thy renewal date, know thy budget, know thy wants and needs, know thy future goals. Like, what are your future goals or life changes that might be happening after this renewal? And to your point, Peter, like maybe you're a young couple in a condo. Sounds great now, but it's really good for your mortgage professional and banker to know that, hey, you know what? We're thinking of starting a family. We're going to want to move to that suburban home in the next 2 years. That's appropriate and important to know, because can you port that mortgage? If you break that mortgage, super important to know right now, especially in the higher interest rate environment, if you go fix, is there an IRD penalty? What would that potentially cost me? All these things are important to know. So know your future goals is another aspect of what you should be looking at right now.
So going back to the planning bit, everybody kind of creates their lives around their income, and we plan the best we can. But here we are staring at higher interest rate environment, and my mortgage is coming up for renewal. Not many of us plan ahead for that, right? Of like,
well, you couldn't, Glenn, because let's think about it. And this might give solace to anyone listening into this. There's no way you could have foreseen this. None of us could have foreseen this coming. Hell, Bank of Canada up until the end of 2021 said, borrow away. Rates are going to stay low for a very long time, right? And historically, to their defense, rates have stayed in that normalized level for the last we're in a 40-year high right now. Rates have not been in this level of inflation in the past 40 years. So, your millennials that are out there, if you're in that age group of between 20 to even 40 years old, you have not ever been through this type of environment, so you wouldn't have known.
So we're seeing a lot of clients kind of coming in and a standard renewal. Their payments are changing, like on an average mortgage, between $600 a month, $1,000 a month, more, depending on how big your mortgage is, of course, and what options you take. But so now how do we try and, the client says, well, I can afford what I'm doing right now. How do we kind of get that as close to that as possible? And so what are some ideas that we use with our clients to help get them there?
I think starting off with your mortgage professional, and you should become prepared with that. If that's your question, like you're coming in saying, Glenn,
cash flow
is cash flow. And knowing your cash flow is going back to what we said for the pillars of coming in, knowing your renewal date, right? Knowing your budget, knowing what is a need and a want in the house, because everyone's needs and wants are different. And I want to clarify that, right? Like, I don't think anyone should be shamed if a need to them is to have that gym membership. If that is super important to you and that's a need, then let's figure it out, right? It might not necessarily to other people be a want. If for you, if it's something that's grounded in your household and that's a need, then that's a need. But know the difference between wants and needs for your house, of where you can, to your point, trim the fat or maneuver things, right? And get rid of it. And also understand, what are your future goals with this mortgage? Like, thinking strategically now, which a lot of people, I think this is the problem when you're in a lower interest rate environment for a very long time. I think we take for granted having these discussions and really doing that plan moving forward and treating your mortgage part of your overall financial plan. So understanding what's the next step in sort of your lifestyle. And, Pete, you and I have talked about this because you do annual reviews. If you do have a financial advisor you work with, mirroring that financial advisor and getting them in contact with your mortgage professional, that you're all having the conversations together to make sure that everything's in line for your overall financial well-being.
So clients, you have options, right? Your mortgage is up for renewal. You can just do a straight renewal, right? And take that hit and to your household, your financial budget. So if that's $1,000 a month, that becomes an option. What if I need a lower payment?
Consolidate debt. Consolidate debt.
Extend amortization, right?
Yeah.
So if you have debt that's lingering, we can, I'll say create, I don't know, make a refinance happen. A refinance is a word where typically it's like, I have debt and I want to pay it off. Absorb it into the mortgage with my equity, pull some equity out, pay off the debt. But a strategy we're using right now is sometimes it's like, I don't have much debt to pay off, but I just can't afford that extra $1,000 a month. So taking your 18-year amortization and throwing it back out over 30 years, I'll call it temporarily because we're all in moments of time, right? We're all in. So sending that payment out over 30 years might make that $1,000 a month payment that you would normally do on a straight renewal down to $300 a month. It's still going to increase, but we're just going to try and make it the best we can.
Yeah.
Right?
Yeah. What I'm also finding is a lot of clients are good with just renewing and they're comfortable with the rates and the payments, but they want that fallback, right? They want that fallback for potentially doing something in the future. So I'll be doing a lot of line of credits, secure line of credits in second position to help them in the future if they need it.
In case
right? Because they are worried. They're still worried about the economy. Like we have to be cautious going forward. And they just want that fallback just in case, right? Cash flow gets tight. I could draw down on a secure line.
Think about job stability in a market where the government, as not so many words has said, we need people to lose their jobs in order to like right this ship. It's like people should hear that and go like, what would happen if I lost my job today? Yeah. Back to your point,
you won't qualify.
That safety net, taking that line of credit or some form of safety net like that, when times are okay, like you have a job right now. It's not a good. That goes back to your planning and your review, right?
Yeah,
like
you're preparing. You're preparing for the future,
right?
For sure.
That's a very good one. But it is all about getting your house in order, right? Your mortgage is coming up for for renewal, and it's like this catalyst to have these bigger conversations. So if you haven't had a mortgage review with Peter in the last annual review,
should do it now.
Yeah, or any solid mortgage professional that might be sitting in this room. Just kidding.
There you go. Good call out. I know if you're at Tribe Financial, if you need a referral, I'm more than happy to refer you over to them.
Of course.
But I completely agree. The positives I see in all this, because you guys know me, I always try to find the little glimmers all the time in all this. I think the positive in all this is a society, it's causing us to sort of take a step back and re-review everything that's going on in our lives. Too often for too long, I think consumers were just sort of checking off the boxes on their renewal. Rate looks good, looks decent. I'm just going to renew with my bank. Payments are still in line, and not having those discussions. So the positive I do see in all this, if you do take our advice today, is taking that step back and saying, what can I do differently? What can I do better? Where can I save some money? Because at the end of the day, saving money is what it's all about. And how can I re-strategize not only my debt position, but tie that into what my goals are in the future with my investment position to make everything be right size for me, my family, and my financial health. So as much as it may seem like there's a lot of doom and gloom, oh my God, mortgages are coming up for renewal, you need to renew it. People out there, take this as a positive. There's opportunities right now that you could be doing a deeper dive into your overall financial position and creating a masterpiece with your budget, so you can live the life that you really want to live at the end of the day.
Masterpiece.
Yeah. Can I add a bit of caution when it comes to a line of credit or consolidating debt onto your mortgage? And we have all seen our clients use their house as a virtual ATM. There is this weight that is lifted when your credit cards are paid off and your line of credit's at zero. But there is this propensity to spend because you have this newfound freedom, and there is a euphoria of when you feel debt.
It's habits.
Yeah, but what you've done,
Of
you've just
course.
transferred that debt. So be very cautious, because I don't know how many times we have had clients.
I agree, but that's why it's sound, going back to the pillars. I'm going to call it the pillars of mortgage renewals, of what you should be doing. And the pillars that I think are very important is going back to, again, know thy renewal date, but know thy budget, know thy wants and needs, right? Like, you do not want to get yourself, no one wants to get themselves back into the same position that they had before. You know, it's like a quote out there: the scariest thing in the world is to be in the same position you were the year before, right? Like, the idea of doing this exercise is not to give you that sigh of relief that now you can just keep doing what you did before. Before you do this, really do a deep dive to understand your budget. Really do a deep dive into understand what is important to spend your money on, and take that time to create those habits. Habits will take, on average, they say 66 days to really rewire your brain. So, you know, debt is addictive as a drug or as alcohol or anything else, right? There's addictive behaviors that are behind it psychologically. And I'm not saying, you know, your spending habit at your Starbucks is a bad addictive behavior, but it's a subconscious that you do. If you are serious about getting through this and for financial freedom and creating that masterpiece, create the plan and stick to that plan, and lean in on your mortgage professional to keep you accountable, because that's what a good mortgage professional does. They're there to work with you for the lifetime.
Right. We can't control, and this is like kind of like bringing it all full circle here. We can't control what's going on across the world. We can't even control what Bank of Canada is going to do. I'd like to have a 1-800 number right directly to, what's his name?
Tiff, call
Right.
us. We'd
Yeah.
love to talk
Yeah.
with you.
Yes.
Guest
It will be
speaker.
It'll be a great conversation. I promise you.
But we can't control it.
Yeah.
Really. So, but we can control our own house, right? And so that's what really this is about, is take control of what you can. And so there's no questions. We've all felt cash flow crunch, us included, everybody. So it's time to kind of like rein it in, figure out what our budget is,
Wants and
what
needs.
the cash flow is.
Where's your future plans? How does that fit into it? And look at this as a clean slate to go into right now. Look at this as an opportunity to actually be comfortable. Find the person you're comfortable with. Find the mortgage broker that you want to be engaged with, and have that open-hearted conversation. Be able to lie it out on the table and get that professional advice to create that plan. And again, create that masterpiece in your financial plan.
Agreed.
And don't hide under a rock. Francis said it. If you are staring at a debt, or you're in a financial position that you do need to you need help resetting, you don't know where to start, engage a professional.
And this is one thing I will promise. I don't use the word promise very often. I promise you it will make you feel better having those conversations now and not waiting to the last minute. Don't avoid those conversations, because it just won't make it any better. You know, one of the favorite quotes that I have is, you know, when you're going through a storm, you don't sit there in the storm, you run through it to get through it. Run through the storm, have your mortgage professional hold your hand, and just help them guide you through these high inflationary times, because there's a lot of great people out there that want to help you. So take their help.
I find that we are the voice of reason when it comes to analysis with the clients, because we know exactly what they're going through. And I advise my clients of the trend. This trend, it's not good. You can't have $1,000 monthly payment on a car lease. It doesn't work, right? And how many times have we refinanced, consolidated everything? And just like you said, euphoria, right? Clients are like excited about everything. And all of a sudden, within a month, you reach out to them. Hey, how's everything going? I just booked a trip to Greece for 2 months. What are you doing? And that's what we're here for. We're the voice of reason. We're here to keep you on track going forward.
And I will say that there is nothing you could probably surprise us with. You're probably, you know, if you are in a position where you feel like you have to consolidate and you don't want to talk about it, you don't want to share it because of like anxiety or shame of debt. We're kind of like the doctors who, like, you know, you're about to go in for your first physical and he's like, buddy, I've seen it all. Drop them. Like, just get to your mortgage professional.
I was going to say psychologist, but like,
This
sure,
just became
we'll use
X-rated,
that.
but-
Yeah, exactly.
No, you know what I'm saying though. It's like, there's nothing we haven't seen. There's nothing that it will even
Phase us, for
not
sure.
even. No, we're here to help. We're not here to judge. Yeah.